How to take decision before buying any stock. India. 1. First, define your objective. Ask yourself, are you investing for long-term wealth, 5-10 years, or for short-term trading? For beginners, I strongly recommend long-term investing plus strong companies. The 5-step decision framework. Step 1. Understand the business. Never buy a stock without knowing. What does the company do? How does it make money? Is the business understandable to you? Ask, is this a product service used regularly? Is the industry growing? Prefer simple, stable, essential businesses, FMCG, banking, IT, pharmaceuticals, infra. Step 2. Check fundamental strength. Look at these key indicators. Revenue growth, consistent growth for 5 years. Profit growth, net profit increasing steadily. Return ratios, ROE and GT. 15% ROC and G. 15% debt. Level debt, equity. NLT1, ideally lower. Cash flow, positive operating cash flow. You can check these on screener.in money control, ticker tape. Step 3. Valuation. Is the stock overpriced? Check P/E ratio compared to industry price to book. PB, historical average valuation. Avoid buying fundamentally good stock at absurd price. Buy quality stock at fair valuation. Step 4. Management and governance. Look for promoter shareholding trend. Any fraud, penalties, governance issues, frequent resignations of directors, red flags, promoter pledging high shares, sudden accounting changes, poor transparency. Step 5. Technical timing. Optional but useful. For entry timing, avoid buying at 52-week high. Blindly look for support levels, consolidation breakout, moving average trend, 50 at Mand and AMP, 200 DMA. For beginners, buy during corrections, not high. Simple decision checklist. Before buying, confirm. I understand the business. Company profits are growing. Debt is under control. Stock is not extremely overpriced. Industry has future growth. No governance red flags. I can hold for 3 to 5 years. If 5 or more are, yes, stock is worth consideration.